Hello, this is Dave, and welcome to Equity Story. Just having a look at, first of all, at the ASX 200, and again, I think as you can see, like we're talking about the last few nights, holding that moving average and that sort of turning up quite nicely. Now that potentially is a good sign because maybe obviously with interest rates possibly going to be on hold tonight, we can have a nice good day on the markets tomorrow. And that'd be great, and hopefully if we see that, we can see some of our trending stocks at least start making us hopefully some decent money. However, the issue is, and obviously everyone's saying, Dave, why is Equity Story selling most of their stocks? And well, we're not selling them all. We're selling a good percentage of them at the moment, and often a lot of those are ones that we think are sort of pretty high Ps and have got a lot of sort of future growth put into the share price. The reason we're doing this is that just at the moment we don't feel too confident with the market, and really the story is it's all about, for us, it's all about the potential that we could have a Trump as president in America, and possibly in 2 months. And the issue we have with Trump becoming president is nothing to do with obviously the capabilities of what he do as a president. That's obviously we'll wait and see. But it's the fact that really he's going to break up the marriage between the Fed and Wall Street. And there's, for the last 8, 10, well, longer than that, 12 years, whatever, there's been this great marriage between Wall Street and the Fed, where the Fed have really sort of bowed down on sort of one knee to Wall Street and done more or less what Wall Street wanted. I think the interest rates have been obviously at ridiculously low levels. They haven't actually seemed to do anything substantial or really help the world economies in any significant way. And I think you can see with Japan that's had record low interest rates for 30 years, it's actually done nothing to stimulate growth. They're actually discovering now that there's an argument it does the opposite, because it just makes people think, I need to save more when I get older. So I think Trump realizes this, and he's going to, if he gets in power, I think the marriage is over between the Fed and Wall Street. And when you look at the moment and you see the market's getting hammered for, the possible rumor that we might go up 25 basis points is enough to put enough fear in the markets. We could be down, 10%, 15%. What's going to happen when the markets think, or possibly that Donald Trump's going to be the next president of the United States? They're going to know the game's over. They're going to know the whole little happy Wall Street marriage is between the Fed and Wall Street is finished, and markets could go down a long, long way. And what I'd like to do is just show you this video of Donald Trump talking about his obviously what he thinks is going on at the moment with the Fed and Wall Street.
You were to advise the Fed, what would you advise them to do regarding interest rate policy?
Well, as a real estate person, I always like low interest rates, of course. But I think what's going to happen is you're going to have them until January 1st, because Obama wants to go, he wants to play golf, and he wants to leave. He doesn't want to have any stock market disruptions. And I think I think the Fed is being totally controlled politically. They're not raising rates, and they're being controlled politically. I think they're going to be low till, I don't even know if they're going to have a raise, but they're going to be low till the end of the year. I don't think Obama, he wants to go out. I mean, shouldn't be working this way. Shouldn't even be discussing it. Martin may or may not disagree with me. I just think that I think it's a terrible thing that's happening, because we're doing it for political. I believe the Fed is very political. It's become very political, like many other groups in this country, beyond anything I would have ever thought possible. And so I think you're going to have low interest rates till the end of the year, maybe no increase at all. And the market will stay artificially high. And then we're going to have to see what happens after that. But I think it's...
So there you have it. There you've got sort of Donald Trump's take on the Fed. So, sort of a month ago or 2 months ago, the general feeling was there's no way Trump was going to win. At the moment, he's turning in the polls. It's neck and neck. And I think, especially the fact that Hillary Clinton to me looks seriously ill. Her friends have come out today, said she's got Parkinson's. I think the game's up for her, and I think I wouldn't be surprised to see Donald Trump as president. If that does happen, potentially the markets could, and if you look at the Dow, I'll give you a good example of how easy this Dow could come off. So, if you actually look at the Dow, and here's a weekly chart, I could easily see the Dow coming back to these sort of levels, 12,000 or even 10,000, and that's the way stock markets move. I mean, if you look here, 1998, 2002, it went back and touched the same level. 2002 to 2008 came back and touched a similar level. We've had this great run up, and this has all been that sort of possibly a big pump up, a big marriage between Fed and Wall Street, and potentially, if this marriage is over, what I'm saying, it's highly likely we could come back and retest this 10, 12,000 level. So for Equity Story, the markets are always all about risk reward. At the moment, is there a possibility Trump is going to be president? Yes, there's maybe a 50% possibility. If he is there a good chance the markets could fall back 30-40%? And the answer is yes. So at the moment we see too much risk to be in the market. So that's why we've been selling, and that's why we do feel the next 2 weeks will be pretty good. So that's why we'll most probably ease out of a few more stocks. Don't panic, because I think if this fall is going to happen, it's going to be something that could happen maybe sort of more like October. I don't believe it's imminent, but I think it's time to be cautious. It's a time to have cash in the bank. And you know what? If it doesn't happen and everything's great and Clinton wins and this whole marriage between Fed and the Wall Street keeps going and we have these artificially low interest rates, well, we'll buy the same stocks back again, because the stocks that we've got, our 3-year growth stories, are the best in the market, and we'll buy them back again, and we won't take the risk. But at the moment, we're just being very, very cautious. Obviously having a look at the trending stocks at the moment and what's been going on there, because that's sort of been a bit of fun as well. BAP looks great. I mean, it's holding its level, so hopefully it won't be long before we're making some money on that stock. FPH again just looks absolutely ridiculously good. I've got no issues there. ORE looking a little bit weak for us, but I'm not sort of, if it does break, and I'm going to be a bit strict with ORE just because where we feel the market is at the moment. I think if it does break below that sort of 355 level on a weekly, we will cut it. But at the moment, I like the report they put out the other day. This is a company with a market cap of 800 million. Potentially, they're going to be their revenue next year could be around sort of 400 or 500 million with great margins. So this potentially, most analysts have this as a $6 stock. So I've got no issues with just holding it around this long-term trend for the moment. Again, FPH. One of these good solid trends we put on a pretty awkward, difficult time. SIP holding up for us very well, as is FXL. I've got no issues there, so we bought this one on that short-term trend, so that's fine. It's got a decent swing. Hopefully it'll start turning up from this level. We've got a nice dividend in it. CBA, possibly get out of jail on these two. They are sort of range trading, and we've got a nice dividend on CBA, and hoping you can bounce up to that 75 or bounce out of it, and the same with Westpac. The one stock that hasn't obviously been doing well is Vocus. Now we put this as a buy today, and the reason being is that this is a company that's had one of the best earnings reports I've ever seen a few months ago. It has been sold down recently because basically it's had a whole stack of cards go against it. It had the managing director. The main guy started selling his shares. He just decided to get out, but it wasn't anything to do with the company. He just wanted to obviously spread his wings and do different businesses. Then you've got the TPM reporting pretty sort of. I think their earnings growth is going to be a little bit 6%. The market was disappointed, and now obviously Vocus, the CFO's resigned. So they've had a whole stack of cards, which has, I think, given a tremendous buying opportunity around this sort of $6 level. And this company, someone said to me today, and I've got a brilliant guy that works with me in the office. He said, Dave, if you've got a Jaguar over there and you can buy it half price, you buy it. And this is why we bought this. This is on a forward at $6. It's on a forward PE of 12, and it's growing its earnings next year, FY17 at 25%. So we believe this is fantastic value, and I suppose you could argue we're averaging down a little bit with it, and we certainly weren't really expecting it to break this trend. It did, and it did it quite aggressively, and I think it's just had a stack of issues just going against it. And you know, here at Equity Story, without showing off, I don't think we're the most successful share advice website ever, what I believe someone told me the other day, by just always looking at trending or fundamentals or the other things that we use to try and ascertain to buy and sell stocks. There's a lot of thought process in it, a bit of gut feel, and I think that's what makes it very different to what everyone else does. So yes, we will cut out of a trend occasionally, but sometimes if it drops fast and quickly and it looks like a great buying opportunity, well, why not take advantage of it? And the market is all about, you know, taking advantage. I love watching Bear Grylls when he's in the jungle. You get given certain things in life, and certain things fall out of trees. Well, you know, you take advantage of what comes in front of you, and that's the way you survive and make money. And this has been, I think, these sort of levels and what's been gone has given us a great advantage today to buy Vocus around this sort of $6 level, and hopefully that will be a fantastic buy around this sort of level. Anyway, that's all I've got to say tonight on Equity Story. I'd like to thank you for listening to us, and just important, what I'm saying to you tonight, this is not to panic. I'm saying I think if the markets come off, you know, most probably going to be more likely next month, because you know, I think, you know, we're trying to sort of look what's going to happen in a little bit next month, and you know, there's plenty of time if you just feel like you want to ease out of a few of the stocks to do it. So I think we could have a nice run for 2 weeks, and hopefully that will give us a little bit of breathing space. Anyway, I'd like to thank you for listening to Equity Story, and have a good night. Thank you.